So the overarching topic for this event was how are innovations in the crypto space impacting and disrupting potentially mainstream entrepreneurship, mainstream economy, mainstream finance. How is everything going mainstream right now, right? And we're at that cusp, we're at that place where things are starting to go mainstream. We can all feel it. The 2020s are going to be different, and crypto and blockchain and all of the related technologies around it are going to play a huge role in changing the economy and changing the world around that. So we have a panel here. I'm going to allow everybody to introduce themselves first. I'm not going to introduce them. And then I have questions for everybody. You're going to get really great kind of perspectives from the people who are creating these ventures, from the people who are looking after regulations, from the people who are looking at like how the brands are dealing with them. So please, without, I was just stretching this out because I was waiting for people to come and join us. But, okay, please, can we now hear from Roxana, please, who's going to be the first great panelist that we have here to introduce yourself. Thank you.
Thank you, Vijak. Hi, everyone. Very nice to meet you. My name is Roxana. I'm a privacy advocate, digital entrepreneur since 2008. Spent over 10 years in the digital economy space, helping communities and companies launch. I'm currently the managing director of Launchpool Labs. We incubate, fund, and help launch very early stage projects.
Thank you for the introduction, Vijak. So in terms of who I am, I'm the founder and CEO of Venrai, which is a digital asset compliance company that was founded 3 years ago. In terms of my background, it's predominantly been in the banking sector. I started off my career at Lehman Brothers pre-administration, then went on post-administration, then working in Deutsche Bank on Wall Street in equities prime brokerage, and then returning back to London within Deutsche Bank, and then most recently working at an Italian banking institution, heading up their advisory compliance team. Thank you.
Hi everyone, I'm Ayo. I am a digital brand strategist and I've been working for 15 years across D2C. That's my intro.
Oh, that is quick, yeah. So hi everyone, and nice to meet you. And my name is Mo, and I'm a technology entrepreneur and product leader. I worked in the technology space for the past 15 years and across quite a few different sectors and companies and countries. I'm a serial entrepreneur as well. My first startup became a unicorn, and now I'm working on my next startup now based in London, which is about a community commerce and deep commerce concept. And I'm very happy that I'm here with you.
Okay, thank you so much. So the first question, I'm going to go around the road. So Roxana, everybody's excited here about, you know, Launchpool Labs, finding out more about it. Some know about it, some don't. So, you know, those who don't, it's like you will maybe tell us a little bit. You can stake tokens, and then you can take part in upcoming new projects before they're even out. You can get a chance to be in on very, very early on those projects that potentially can go 50x, 100x, whatever it is. You can be in very, very early. So the question is, can you tell us a little bit more about this model? And also, can you tell us how is this different to the traditional Silicon Valley venture financing? What's the difference? What are the, you know, like, how is it like change the world by having a model like this to get startups backed by people?
So let's ask two questions. Who here invests in cryptocurrencies? Okay, good. Who here has a company and is looking for funding? Good, okay. Now, the model for companies is this. You create a deck, create a prototype, and then you start pitching to VCs to get funding. If you have a token attached or an NFT, for example, you also want the retail community to join, because without community, your project will never survive. Crypto is very community-centric. It's one of the few industries that is highly community-centric. Now, there's not a shortage of money in this space, so it's very easy right now at this moment to raise at least $1 million, which will give you a runway for about 2 years. There is a shortage of very good projects. There's a a thing in crypto where we say that bull markets cause bear development and bear markets cause bull development. So this should make you think, if you're a startup, if you're a team, if you're looking to launch a product, it's a good time to raise funds, but it's even a better time to make sure that your product is really good, because that's what will ensure that you survive beyond this bull cycle. Then for retail investors, obviously, we want to be involved as early as possible in projects, because as we've seen in crypto, there are kind of the retail investor enters at the end of the line, yeah? So you have these VCs, you have these major funds, there's a lot of private rounds done behind closed doors, and by the time it reaches the public, the game's already rigged, and you're really not, you're not even making a 2x on your investment, so most of the times you're losing money. And to answer this, Launchpool created a model where you have pre-IDO guaranteed allocations. That means that you stake an amount of tokens into a pool, you get a guaranteed allocation, and as long as you pay for it at the end of the staking period, it's yours. Now, the downside is that you have a vesting schedule which you need to abide by, same as any fund. So this is the whole idea of being your own VC. It's a mind shift. It encourages people not to look at profits on a very short-term notice, but to look long-term, to find the best teams that could have the best products, that could ensure longevity of the project, and that it could ensure that you have a return over the next couple of years. So this is the be your own VC model. This empowers the retail investor to think like a VC and to act like a VC. And I think this is very interesting because the crowdfunding space before crypto suffered significantly. As a startup, you had to pay a lot of money for marketing, money that you didn't have, money that you had to bring from friends, family, and fools, the 3 Fs, yeah? You suffered a lot as a startup. And as a participant in crowdfunding, you never had a guarantee, because many times the products you're investing in through crowdfunding platforms like Kickstarter and Indiegogo would not actually become a real product. Yeah, because the funding rounds weren't achieved, so it was very hard for teams to actually deliver it according to promises. Now with crypto, obviously, you do get access to a token, you have more speculation, you have more opportunities to earn something out of it, you obviously have higher risks. But it's very interesting to have the community involved early on and invest in a project together with the VCs. Because a VC will give you a runway, but they're not gonna help you grow your product, or they're not gonna talk about your product. They're just gonna be there to fund you and then make a profit. Now, with the community, with the right mechanisms and loyalty programs and the right gamification, which is at the base of crypto, with the right gamification, you can actually convert the token holders into actual users of your platform. Yeah, so this is a major win for every project, because you have less of a segregation between token holders taking the coin to an exchange, but then you have mechanisms like staking, yield farming, where they can stake their tokens into the app, they need to become users of the app, and then it's a win-win for the project. So there's a shift here, and I think it's very different from traditional startups. Traditional startups, their biggest first pain point is getting funding because of the equity rounds, because of the valuations that are very low compared to crypto, and then the major pain point is getting the users. Yeah, you have to spend a lot of time and money on marketing, you have to convert, you have to speak to your audience, you have to live where your audience lives, and it's not that community-centric. It started recently with community becoming a product inside a product, so you now have community managers, but 8 years ago you didn't have that. Whereas in crypto, given the fact that we are, I don't know, let's say 8 years old with altcoins and everything, and even less than that, we have the value of community very early on. So I think this is a really major shift that has happened. And it's less of a, the barriers to entry are very low, because as long as you have a solid idea, you will get funded. And even if you don't have a solid idea, but you have the right community, the right kind of retail support, you will get funded.
So, yeah. So the question, thank you so much, Roxana. So the question for Jason. Now, you know, we have these different perspectives, so trying to create like a multi-perspectival, you know, view on that question of innovation, how the system will change, and it's changing, and a lot of ventures that are now listening to something like what Roxana was saying, how it's so much more amenable, so much, you know, in many ways easier to raise large sums as well, and so on. With, you know, we all remember the ICO craze and so on, when people hopefully, you know, unfortunately that doesn't happen anymore, but people write a paper and white paper and then, you know, take off with the money and so on. But so nowadays still, now when we have a bit more sophisticated mechanisms, IDOs or IEOs and so on and so forth, what still, like ventures or venturers or entrepreneurs that are thinking of using some of these tools and mechanisms to get their financing going, to build a community, to have their community involved, what do they specifically, from your perspective, Jason, what do they have to pay attention to? What do they need to be careful of so that what they're doing is long-term viable, and it's sustainable, and it's compliant, and they don't run into problems later on? Can you just give us an overview of that for people who might be having those questions?
Yes, certainly, Vijak. So, you know, the actual mechanics of what is going on hasn't changed considerably over the years. Projects are looking to get funded, and they're getting funded via different means. So they're getting funding from crypto assets, from fiat currency, God knows. But ultimately, you're going to need to get comfort over what those parties are doing and who they are. You need to know your customer. So you can't just accept digital assets behind a glass door and expect nothing to go wrong, especially if you're taking in considerable amounts of funds. Ultimately, if you're becoming well-funded and you're attracting a lot of attention, you're attracting attention not only from potential customers, but also from competent authorities. Now, we've seen the likes of the SEC and US regulators really hit home how that these companies need to take compliance seriously, and we've seen major casualties as a result of that. That's not going away. It's only going to get more common, and the reason why it's going to get more common is because crypto is becoming mainstream. It's not going away. And because it's so common for crypto companies to get well funded, it's now becoming increasingly a priority of the regulators to target crypto firms. But that's not to say that that should put off crypto firms trying out innovative technologies, deploying DeFi platforms, NFT protocols, whatever. It's just there is a right way of doing things. If you're ultimately taking on funds from a terrorist organization, or you're ultimately money laundering, these are not the behaviors that a modern democracy is willing to accept. So ultimately, you need to do the right thing. You need to understand where the funds are coming from, and if you're comfortable with who you're transacting with, then there's not a lot else you can do. You have to just perform some due diligence on parties. Going from there, then you can build a successful company, but you need to build it on strong foundations.
Great, thank you so much. And Venrai, you know, helps people, helps startups and companies and enterprises as well, I understand, with that process. Ayo, if I can just now shift a little bit the perspective. I know you're coming from a marketing background, working with brands internationally, and that entire conversation around social tokens and brand tokens and NFTs and so on is something that's very big right now for brands, and that was kind of a conversation that I know you are having yourself. Can you tell us, like, from your perspective, what's the novelty there? What makes it interesting for brands and entrepreneurs specifically to think about some of these new tools in the toolkit when they're starting a brand? Could you tell us about that perspective?
I think what's really interesting is, over the last few years, small businesses, medium-sized businesses have been getting really excited about the space, the metaverse. And I think for a lot of startup businesses and the younger businesses, they're kind of scared to take that leap because it's unknown, it's scary, it's new. We don't know if it's a fad, we don't know how long it's going to last. So I think, like, a lot of the conversations I'm having right now with brands is about testing and learning, and that's what we do in digital, that's what we do in brand, is dip our toes in, see what sticks, and then kind of roll with it. So I think, the idea of creating NFTs, whether that's in, collectibles, art, is really exciting if it works in, the space or, within the market that you're working in, or even exploring, things like a soft launch or a soft test of the metaverse, where that's, playing in an existing space. And these are kind of good entry points. I think the possibilities are really exciting, and I am kind of a newbie in the space myself, and I'm super, super, super excited about it. But for me, the conversations are really about dipping your toes in, seeing what sticks, and just rolling with it.
This is a little bit, we used to have many microphones. I don't know where they disappeared, like some of them, like there's just one left suddenly. But okay, we will make do. But yeah, so great. And Mo, if I can pass the next question to you. Now we have heard from the brand's perspective and the compliance perspective and the support of ventures, the venture support perspective. Now from the perspective of an entrepreneur who's creating a solution right now, and I know that you're working right now as well to implement certain aspects and elements of tokenizing a community and tokenizing, different type of interactions of customers and so on with some of these technologies, with some of the available toolkit that's there. So from your perspective, where's the alpha? Like, what's the really interesting kind of exciting thing that you see in this space, that you think is going to make a difference?
Thank you. Yeah, sure. So let me just give you a bit of a context. What we started a few months ago, maybe a year ago, was we wanted to build an e-commerce, okay? But a different type of e-commerce. We wanted to combine community and social interactions and commerce capabilities, because we wanted to actually make to kind of simulate the experience in the real world when you are in a real world, for example, shopping mall like Westfield, High Street. So you're never alone, right? So you're surrounded by thousands of people, hundreds of people, or you buy in groups with your partner, with your friends. So we wanted to build this kind of combining the social elements and the commerce elements. So then we started that, and that was very exciting. So then what we were evolving. After some evolutions and iterations, we found, okay, so with the help of community, actually, we can solve interesting problems in the commerce space. For example, we can bring efficiencies to the commerce space. Let's say people buying together, they can save on the shipping and on this transportation, logistics, etc. Or they can have this kind of collective bargaining power against retailers, etc. So they can get better discounts. So that was also very exciting. So we found that, okay, so communities, the communities have power. So with the help of communities, we can bring efficiencies to the e-commerce space, and it's good for people, it's good for businesses, and it's good for the environment and sustainability, and etc. And that was also the turning point in this evolution. So then we found out, okay, so building a community for a business is actually something very strategic in this sense. And actually it's a pain in the, it's a pain for them. So, because, for small and medium businesses, for local businesses, for micro entrepreneurs, to be able to have, to acquire new customers, it's not easy. Most of the small and medium businesses, they go out of the business, they go bankrupt after a few years. They struggle to actually to grow and to survive. And that's because, it's very difficult for them to actually to acquire new customers. Running ads on Google and Facebook is very expensive for them. So that's where we found that, okay, we need to help small and medium businesses, the micro entrepreneurs, local businesses, to build their own communities. So building a community then was like science. What a question mark? It's an unknown science. Because they need resource, they need knowledge, and this is not a kind of a one size fits all solution for building a community. But then we ran a lot of experiments, using machine learning and artificial intelligence and these kind of things. We built different apps and bots on how we can help actually small and medium businesses to build communities with the help of technology. And then that's the last kind of iteration of our evolution was actually then deciding, okay, who owns the communities and how we can actually incentivize community creators and community members. And that's where this concept of community tokenization came to our game. And that's a very funny and interesting thing because, we didn't start community tokenization because it was cool, because it was, the cutting edge of technology. We found a need from the commerce side. We found that people, small and medium companies, and micro entrepreneurs, they need community and they need to actually to grow them, and then communities need to grow and survive, and the communities need to flourish, and the way we can actually help them flourish is to tokenize the communities, to incentivize community members to get to be able to get rewards for their contribution to the communities, for the content generation, the engagement they show. To the community and to help the small and medium businesses. So that's where actually this community tokenization came to our story. And now the most recent thing that we are working on is now we are essentially building a community OS. So we call it community operating system. So a collection of different bots and apps and technologies and tokenization technology, etc., to actually to build a one-stop shop for SMBs to build their own communities and to grow them. So that's what's the most recent kind of innovation that we are working on. And there are some things that I don't want to talk about them now.
So the next question is just for all of you, and then we can just go one more. We don't need to go back and forth. So no, that's great. I love also to see like the connection points between, for instance, Roxana was talking about how much easier it is in the crypto space, to build a community, to develop a community, and so on. It's not.
It's not easy. It's easy to raise funds. It's not easy to build a community, but it's very community centric. So you have a larger pool. Your audience is just like around the corner.
Right, so it's a community-centric kind of ecosystem, and then I think it kind of connects well with where Mo is saying like what you're building in with regards to kind of applications, and seeing like, okay, how can we take certain technologies there, also combine them with other things in the entire stack, and build new value propositions basically. But so now I'd like to see from you guys. So there's, again, because this is a quite general perspective that we're taking right now, and with entrepreneurial people here in the audience coming from different perspectives, but everybody I think is on. Did you ask before who has their own business? How many people did? Who's an entrepreneur here? Okay, everybody. I think 80, 90%, 80%, 70%. Okay, so with regards to all of these the new tools, the new kind of trends, the new technologies that exist in this space, because that was the overarching question. When do some of these new technologies, how do they come over into the mainstream and change the mainstream? Obviously, we had the big NFT wave this year, where everybody's talking suddenly about NFTs. Suddenly, people who are not even really kind of into the underlying technology, they're suddenly talking about it. What do you think from the many tools and technologies that are, the innovations, actual tech innovations that are being developed in the blockchain space. And I know some people are not interested in that. They see they're just interested in the currency. They're just interested in the store of value, or they're just interested in Bitcoin or whatever, and that's it. They really say the blockchain, forget about it, it doesn't matter. But I think many others from us here, that we see real value, real innovation in the technology. We can do new things with that tech that was not possible before, right? So from all of these new things, NFTs, DeFi, DAOs, we heard about DAOs today, from all of these new tools that blockchain makes possible, which ones do you think are going to have an impact, or more of an impact? Which ones will we hear more of? Which ones can you see are really interesting and are going to change the economy in ways that we don't know or we haven't seen yet, that is still to come?
Privacy. I actually believe we're going to probably see the death of cash as we know it. So everything is going to be digitalized, and it's going to be a huge demand for people to have privacy coins like Monero, which now is used in London to buy drugs. But it has a use case. I think it's very important that we have privacy protocols that enable us, for example, to transact NFTs privately, that enable us to participate in DeFi offerings privately, and so on. I think privacy is very big, and it's still a very under-tapped potential, and a lot of people ignore it. Because, for example, Solana is big, but there's no privacy layer on Solana. Bitcoin has no privacy by default. It has layer 2 solutions that are more private or offer better anonymity. Ethereum basically only has Tornado Cash. So there's a demand for every protocol to have privacy layers, and they're highly underrated. I think that's where the innovation is.
Over time, I think we're going to see everything that we perceive as having value in the real world in a digital form. Now, the first proof of concept of that was Bitcoin. It's a digital gold. And that works. It's more and more being perceived as a store of value. And we're seeing peer-to-peer cash protocols. We're seeing DAOs, which also allow you to see the value of companies in a digitized form. You're starting to see so many interesting protocols, but none of this is really new. It's just a digital incarnation. And what we're seeing with NFTs is incredibly exciting. I mean, one of the latest NFT projects that I've followed is Damien Hirst's The Currency. And now, if you're not familiar with that specific project, every physical piece of the currency artwork is also duplicated in an NFT form. And next year, everyone that's holding the currency in NFT form will get to decide whether or not they want to keep the NFT or keep the physical artwork. They won't get to keep both. Now, why is this interesting? This is interesting because ultimately that's a vote as to what is more valuable. Is it the physical artwork that's more valuable, or is it the digital artwork that's more valuable? You're going to get a split, and ultimately that will be a great insight as to how we as humans perceive value in the modern world. So everything of value is going to have a digital representation, and that will allow the fungibility and the peer-to-peer, borderless, frictionless payments across the globe to become a true reality, and that to me is incredibly exciting, and it's only going to become a bigger thing as time progresses.
I think from a brand perspective, it's very much loyalty, community ownership, and advocacy. So, you know, these are the key things that brands tend to struggle with, is how do we kind of build loyalty? And I think what I'm seeing is this kind of new wave or the new way we'll be dealing with loyalty, you know, within businesses and within brands. I think that's a really big thing. Then the community ownership side of things is, you know, kind of having your community and your fans owning a proportion of your business, you know, to some extent. It's like brand equity at this stage, and I think that's another massive thing. And then in terms of advocacy, I think you then have your fans becoming really committed community members who are then advocating for your business. That kind of throws a spanner in the works for influencer and affiliate marketing. So I think those are the key things for me.
Yeah, thanks. Because you asked about the technologies, what I'm saying is that, you know, I'm borrowing this from Jason, so everything real is going to have a digital representation, but in a different dimension. This kind of metaverse, you know, everyone knows about it. And so very interesting thing happening is now, you know, the combination of VR, AR, and NFTs. So this is going to be also very, very disruptive. So because, you know, essentially blockchain is, you know, enabling the creator economy, taking it to the next level. So creators are, you know, just, you know, getting more and more, you know, increasingly, you know, everywhere. And now, you know, with metaverse, you know, becoming a big thing, which is, I believe is a real thing moving forward. So a lot of a new generation of creators are going to actually to create new things for metaverse. And this is only possible with the help of NFT. So the combination of AR, VR, and NFTs are, I think, is a cutting edge of technology at this time.
Amazing. So I was going to have, I think, you know, there was a third question, but actually I think in the interest of like opening up, I think it's good at this point to skip that. And there was a crystal ball question. We don't. Let's talk to you guys. So. Like, yeah, we would love to hear from you. This was obviously short right now because we only got a little kind of glimpse into these perspectives, but I hope you can see already how the perspectives start to gel into like this mosaic, and it starts to kind of get integrated, and we can get a glimpse of what's to come in the world that's so rapidly changing in the 2020s, right? In this decade, our decade is the world's going to be so much different than it was ever before, and you know, we're kind of constructing this here piece by piece, but yeah, what do you guys, like, having heard this and having seen this, where do you guys what's the, you know, what comes to your mind? What are thoughts, questions that you'd like to share about, you know, how the world is changing, how these new technologies are changing things, how you can get involved? You know, maybe something one of our speakers said and where you thought like, but wait a moment, what about X, what about Y? Please, let's hear it from you guys. We only have one mic, so I have to go back and forth.
Thank you. Someone behind me? This is for Jason. Jason, you said that project was going to make it so that it splits the NFT from the product. But wouldn't that make the NFT principle redundant? Because the whole point of having the NFT is that you have the undeniable right to the product.
Thank you. It's an interesting question. No, an NFT doesn't bestow you any rights unless it is intrinsically stated that that bestows the right to something physical. All it is a digital representation, ultimately pointing to a JPEG on the internet. So, you know, this idea that when you're purchasing NFTs, you straight away get a hell of a lot of value. Again, digital art, and it can't be destroyed, all this, all that. It's not necessarily true. And in some cases, you can have a token which cannot be destroyed, but the JPEG is hosted on a server that can simply destroy the JPEG image, or the server will fall over for whatever operational reason. You lose access to the image. If you're investing in NFTs, you should probably save down your JPEGs because you don't know what's going to happen to them. But the idea with the currency is more that you've got an option. You can either stick with the digital art or you go for the physical art. But just because you've got an NFT does not damn well mean you own that JPEG. You need to be really careful with NFTs. Yeah. Unless it's, yes, but Yeah, there's no IP rights necessarily in that, but yes, there are safer ways of storing the actual image or whatever you've got. Yeah.
So Arweave, that's why Solana uses Arweave by default for NFTs, because Arweave has archiving, which IPFS doesn't. So it's better.
So for example, you know how, was it Vogue or Louis or Dior, they did a drop recently where they did some dresses and stuff like that, some outfits that were sold as NFTs or to be pitched as them.
Luxo?
Yeah,
I think it was on Luxo chain.
Luxo chain or whatever. Yeah, so how would that work then? Because obviously they're selling it as an NFT, but that you can also get the actual dress, right? So based on the fact that purchasing the NFT doesn't necessarily give you rightful ownership, then what is the value of having it? Okay.
If it's explicitly stated that you're getting rights to something, it's very hard for a company to back away from that. But it's not across the board. You still have legal terminology which you need to decipher, and it very much is project specific. So some projects are going to be safer than others, but don't treat all NFTs the same. Yeah.
There is a little nuance to that, actually. There's Boson Protocol, if everyone's heard of Boson Protocol, and as you said, in some IP cases for an NFT, you could be creating a security or a social token security, and then Boson Protocol has made a digital transaction token that essentially clears this no KYC issue and the transaction thing. So that's quite an interesting bit of tech. Sorry, I'm not a mic person.
So my question to the panel is, so it's been nearly really around 2.5 years. DeFi has been going really hyperbole, and everyone talks about DeFi from lending, borrowing, staking, yield. Now, probably around 8 months, I've got the NFT. So in comparison, do you think the NFT is going to be better than the DeFi? Do you think it's the beginning of the bigger beginning for even beyond DeFi? What do you think?
I can just tell you from a regulatory point of view, regulators won't touch NFTs, but they're already touching DeFi. And if you invest in NFTs, actually, even in this country, the taxes you pay is only for when you make a profit out of it, because you're buying in pre-sale, which means it has zero value. You're buying a JPEG. So once you sell it and make a profit, then you just, I think it's 20%. Whereas if you invest in a token in DeFi, that puts you in another taxation pool, so you pay more tax to it. So from that perspective, probably NFTs are a more interesting investment opportunity than DeFi. But in the same time, there are two different things that can coexist. So for example, without being commercial, but with Launchpool Labs, the incubator, we've issued NFTs as access points to the most loyal community members of our retail investor community. And then these people, because they have the NFTs, they get access to pre-seed and seed allocations in DeFi projects. So then, yeah, it's a key. It's an access key. You have a wallet, you have a crypto wallet, then you have an NFT in it, or a smart contract. We'll see that, and it's an interesting perspective. So you can combine the two.
And that's not a security in that?
No.
I'll have to throw a curveball in there. I mean, right now the regulatory treatment of NFTs is not harmonized, and it's unclear, and there needs to be more regulatory clarity before we can have definitive statements as to what is the treatment long-term of NFTs. Of course, when you're looking at money laundering and stuff like that, it adds an extra friction when you've got a non-fungible token, because it's not a liquid market. If you get $1 million in Bitcoin, you can offload that into the market in minutes, and it won't even dent the market because it's so liquid. But if you get a JPEG of a Bored Ape, and it's worth $100,000 on the market, but you need to get rid of that Bored Ape in 10 minutes, you're probably going to have to sell it below the floor price to get it actually sold in time. So that naturally makes it less desirable for certain illicit activities. But it doesn't mean that it can't be used for money laundering or obfuscation of illicit funds, just like the traditional artwork landscape works. There's a lot of money laundering that happens in traditional art. So it's still a little unclear what the long-term treatment is going to be by the regulators on NFTs. But yes, there's scope for discussion as to where it's going to land up. Yeah.
So can we now, and we have to, I'm getting from various places like signs and signals and so on and so forth that we have to little bit like move a bit faster because of everything, the event was a bit stretched out. But can we have the next round of questions like in a row? Can we have like 1, 2, 3 questions? Yeah, and then just collect 3 questions because I saw there was still 3 hands. Is that right? Yes? There's 4 hands actually. Can the questioner, can you please keep your questions a bit short and then we can do the 4 questions, is that fine? Yes, please.
I was just wondering on some of the nuances between the 3 sections. So you got IDO and staking and crowdfunding, and that would be really good to know some of the specifics, what you explained at the start, because I missed that. And then obviously you got KYC and understanding verification, and then social tokens, marketplaces, and all really good stuff. But how these plug in the next 3 to 5 years is super key to longevity, I suppose. I'd just like to know about that.
Do you see DeFi succeeding on non-EVM compatible chains?
Yeah, this is a question in regards to Launchpool. How would that compare business model-wise to decentralized ICOs, such as, if you're familiar with it, a project called DRYE, where tokens are staked and you basically qualify for pre-sales before launch? Like, how would you say it contrasts in business model?
Sorry, just a quick question. Along the lines of like quantum computing and blockchain, where do you think along the lines of like the future lies in blockchain with like quantum computers?
The first question was, the broad question,
how do they combine? Okay. In our case, you have to KYC in order to take part in the pre-IDO. We don't believe in IDOs. We say IDOs, they're not even effective for marketing. So you want to get in the rounds of pre-IDO, which is private rounds together with the fund. In order to do that, you have to KYC. KYC is a valid component. I think you can't have crowdfunding without the KYC component. Otherwise, obviously, regulators will just shut you down. This is my answer for that.
Fully agree. So I won't add anything to that. To the gentleman's question, will non-EVM blockchains survive? I mean, it's just so hard to anticipate where it's all going at this point. I mean, yes, we're seeing a huge amount being developed on Ethereum and copycat chains, but ultimately we're going to see a network effect, and we're going to see a concentration of activity on chain, and there will be a master smart contract platform whether or not it's going to be an Ethereum or an Ethereum-like platform, very difficult to say. But one thing for sure, these smart contract platforms have to evolve. Ethereum is very, very slow, it's very, very clunky. That is not able to handle your modern financial transactions and derivatives in the short latency that is required in today's modern financial system. So these blockchains need to adapt, but because they are simply code, they can adapt over time. But perhaps we will see some major chains, and there will always be different alternative platforms to use. But more likely we're going to see some concentration of activity over time.
And so there's actually a project that's called Turn, T3RN. Turn does composable smart contracts, which means that what they're looking is to create a layer where smart contracts would become interoperable with each other. So it wouldn't matter if you're operating on Solana, Ethereum, Polkadot, etc. So I think EVM compatibility, you need it when, for example, you're building on Ethereum, but you want to have multi-chain, and basically you want to escape the gas fees. And that's why you need EVM compatibility, but you're losing the data from Ethereum to other chains like BSC and Phantom and Moonbeam and whatever there's out there. Oh, yeah, the pre-IDO. So we actually had a panel with YFDI, Launchpool, and UniCredit a couple of months ago, and we talked about this. Launchpool is pre-IDO, it's guaranteed allocations. There's no whitelisting. You have to KYC once, and then as long as you stake your L-pool bag in the dedicated pool, you get access to the allocation for that pool. Now, for Binance Smart Chain, we have 3 pools. One is capped at 50 L-pool tokens, one is capped at 250, and one is unlimited, and each gets a third of the allocation. And for Ethereum, what we did is we merged the 50 L-pool with the 250 to navigate the gas fees. So now we have a 300 limit of L-pool staking and then an unlimited one. And the one that has 300 gets 2/3 of the allocation. So it's a bit different from YFDI. They have really cool stuff. I really like what they're doing. But we work with pre-IDO, and then it's guaranteed allocations, KYC'd. So we don't do the whitelisting thing.
So the quantum cryptography question at the end, please. No? Or was it? Jason, if you want to take it, please. Yes.
Okay, right. I'll start it off. I was going to say good luck and pass on the microphone. No, okay, good luck with me. So quantum computing. I mean, we're a long way off before major blockchain networks can really be effectively attacked by quantum computers. It's not to say that it will never be possible to attack blockchains using quantum computing. But over time, when quantum computing becomes more effective as an attack vector against the likes of Bitcoin and Ethereum, these blockchains will have adapted by then. They probably would have adapted to such a point where they're quantum resistant. So just because it may be possible in the future using really, really sophisticated machines to attack global networks using quantum computing, it's assuming that these networks are not adapting to that attack vector. And I think it's quite clearly going to be the case that these networks are going to become harder to attack as time progresses. 100% agree. No, okay, right. I took you. All right, fine.
Thank you so much, everybody. Thank you for the panelists. Let me please hear the applause, the hand for everybody, the panelists.